There we go. Well, again, thanks everyone for coming today. We're going to talk about winning listings and eliminating buyers sticker shock. Rates have gone up about since January, about 1.75%. And then we're going to talk about what everyone is talking about, a shift in the market. And I like to do that because it's not this huge shift. And so I just really want everyone to be armed with all the right information, with proof of it, because it's not just us saying it, it's facts. So we're going to move right along. So warning, graphic content, just kidding, right? So the content of these slides, and I'm going to send you guys the slides, and I'm going to send you the graphs I used in JPEG format, so you can feel free to use them. It's real, and it's something you can use today, right here, right now. But one of my biggest things is, I know I talk to agents every day, and I'm hearing fear and I'm hearing doubt because they're talking to their friends and family members and past coworkers and past clients, and getting fear and doubt from them. And 90% of what we do, you and I, every single day is about our mindset. And if we can control that and then link it with our heart, we're going to be fine. Because the true stats are not scary. So one of my favorite people ever is Andy Andrews. I've been blessed enough a couple times to meet with him. And after the session today, I'm going to send you guys those JPEGs as promised, but I'm also going to send you this link. I know I did send it out to a group of people that Andy recorded to our Fairway team that really just hit home for me, and I'm hoping it might hit home for you. But the big thing was that he shared in this whole idea is, so how will you begin to compete at a different level, right? We all have seen market shifting. I've been doing this for 37 years. I've seen more market shifts than most people. It's what we do when it happens that makes us win. So we can either crawl in the fetal position and suck our thumb, or we can say, we're going to break through it. We're going to get through the storm, and we're going to be the people that come out the other side. And so I would encourage you to watch your mindset because I really do believe it controls way, way, way more than any of us would care to maybe even admit, including me. So I've got the chat box open. If you think of a question that you want to do, feel free to put it in the chat, or if you want to unmute, we've got Q&A time as well. So I want to encourage you that we're going to start competing at a different level. And even if we think we have, 0 to 10, 0, our systems and presentations suck, 10, we rock, there's always going to be room to get better and stronger, kind of like the bionic man going through, right? They always made them better and stronger. So I would say the real estate and mortgage business are like a grief cycle, right? We start with denial when we have the shifting market. We go into anger, we have depression, we start bargaining, and then we draw into acceptance. And I want to encourage you that we are literally going to break through that cycle. So what we're going to cover today, and we're probably going to be done in about 60 minutes. This is content I've had, but it's the first time I'm really giving it and teaching it. So we're going to probably be done in 60 minutes, which one means you could have a time to go grab a coffee or work out afterwards, or you could start implementing this. Of course, I choose 3. So we're going to talk about facts, not fiction. We're going to go how to get to those, how to get that information out to your peeps, your community, your database, whatever you want to call it, and then how to differentiate your listing and actually your buyer presentation to create more value, and then increase buyer showing, shorten days on market, and get buyers and sellers off the fence, because even a smaller degree shifting market tends to have people pull back. And so we're going to talk about that today, and we're going to keep it real. So just know this, that the news and the internet, they sell fear and doubt. They literally make more money if you all come from a place of fear and come from a place of doubt. And so I just want to encourage you to come from a place of strength. So what are we all getting right now? We're getting 3 questions. What is going on to happen? What's going to happen with my value of my home? What are interest rates going to do? And is it still a good time to buy? So every single person, whether they really think about selling right now, they want to know what their house is worth and what this market has done to that value. So I would say now more than ever, we've got to put our battle armor on, feel like that warrior, and go and talk to our community. So are we in a housing market correction? This is on everybody's mind. I get this question every single day. The market's going to crash. We're going to have another 2007, 8, 9, and 10. And I would say when we look at the facts, we don't. So when we lead with facts, not fiction, we're going to win. Sure, yes, interest rates are higher. Prices have increased. We do have inventory up a little bit, but most people think inventory has quadrupled. And so then we've got an oversupply and we don't have as much demand, which you and I know are true. It's how we communicate that. And yes, rents are higher. We all know, I mean, I've talked to clients every single week that landlords are raising their $2,000 a month rent that they had before to $2,500, $2,600, $2,700. So just because prices are up shouldn't be a reason for our buyers not to look. And then I want to go through the facts on why this is not 2007. And it's not just because Sandy said so, right? Because they could say, oh, Sandy, you're a salesperson. You just want to sell me. And that's not true, right? Because we have been around for 37 years. I'm praying I could be around for another 37 years, and that I keep my health and my mind to do that. So what I want to give you is facts about 2007. And I think the big thing is that we need to remember that you guys are their expert. And there's some really fun things that we should be doing that we might not be doing, or some of you might be, to keep it true and factual. Because what they need is they're paying you actually for your professional opinion. Even if you're not getting your listings right now, even if you're not putting them in the car right now, they are paying you for future referrals and advice right here, right now. So let's go into facts. So this is a snapshot from about 6:26 this morning. That first arrow on your left is in January. And just so you know, bonds have an inverse reaction to each other. So if bonds are high, that means rates are low. And if bonds are low, that means rates have increased. So here's a simple thing. Green is good. Red is bad for mortgage rates. It means they're going up. We'll usually play a roller coaster up and down, but you'll see we literally kept going down. And then we got better, but something happened. We literally, it's like the Grand Canyon right there. We dropped off the edge and we hit this floor of resistance. And it's so crazy that when we see this and we know rates have gone down, there's a floor of resistance that if we break through it, could go further. But you'll see we bounced up and rates got a little bit better over the last week and a half. Now we had some rockiness yesterday. We've opened this morning a little rocky. Rates change every day. And so there's a lot of reasons still to buy versus rent. And we'll talk about that in a little bit. But I wanted to show you that we actually have graphs that go back to 1972 that we're going to share with you. And I will literally share with you to be able to give to clients, because we share them with them all the time. Because my job is not to tell them what to do, but my job is to give them the facts, educate them so that they can make an informed decision. So check this out. This is pretty crazy. No, while I've been doing mortgages for 37 years, I was not back doing mortgages in 1972. I would have been 8 years old. Didn't even know what a mortgage was. So, but for 21 years, since 1972, we had mortgage rates over 7.5%. 21 years. And then the next 16 years, they were over 5%. So our challenge is to get into the mindset of all of our friends and family and past clients and past coworkers and the public, really, is to let them know that little snapshot in time that we had the lowest rates ever in 2021, that was the fluke. That was the anomaly. The higher interest rates we're seeing now are actually more back to normal. Now, I know it was great, and there's a lot of good things about the lower interest rates, but it wasn't normal. And our problem is we got really quick, and I'll include me in it, right? We got really quick in 2019, 2020, and 2021 with those rates coming down and being that low. But the whole thing is we knew that wasn't going to last. That was like going out on a drunken party, drinking it up for a year and a half. There was always going to be the next day, the morning after. And in January, we started getting the morning after. And so we've got to make sure we have facts. And this is from Freddie Mac. This is facts of where 30-year mortgage interest rates have been. So I'm going to read a question. Yeah, absolutely. I totally agree. They're awesome to share because remember, facts, not fiction, wins. And don't kid yourself. We are in a battle with the media and the news and the internet on a constant basis with facts for all of the people that we love and care for. So here's another slide that I have that shows the current mortgage rate compared to the last 5 decades. You know, my first mortgage was 1989. It was 10.5% for a 30-year fixed FHA. And I had seen it at 13 and thought I won the lottery. And of course, it's that whole idea, fall in love with the house. But if the mortgage rate, like for me in 1989 was 10.5, right? I could have went in the 90s and refinanced that, what we did, and got 8.5. And then I got it down to 6. And then if I wasn't so busy taking care of all my clients in the last year and a half, I would have refied again. So you're married and fall in love with that house. That mortgage has no prepayment penalty. So it absolutely can be always refinanced. But we all know if we look at the cost of the home over the last 3 years, even if, literally 4 years ago, we were at about this rate in interest rates. If we never bought, look at the amount of equity we would have lost. So another great place is if you're trying to give your clients a place to look at where rates are, I always highly suggest do not send them to the internet because what lenders put out there is not real. Plus, you do not want to have a pre-approval by an internet lender that won't get accepted by a seller and listing agent. So this is Freddie Mac's website. They do a survey of lenders to see where they're at for rates. And it's not a survey of lenders of salespeople who will always lie when it's on the phone just to try to get the deal in and then give a surprise that rates went up when they probably really hadn't. So FreddieMac.com, I'm going to include the link in the email I sent you guys, is a great place to go. You'll notice on this closer view, when I took the snapshot, that it was 5.8%, but they always have that there were some points down there. And these are real rates. They're not fiction. They're not somebody's going to go surprise. They're doing a survey of a bunch of lenders to see where they're at. It's a great place, especially when you have clients you're concerned they're shopping with internet lenders, and you just know it's going to make it harder on the seller and listing agent to accept it. It's going to be late. It's probably going to be ugly. It's going to cause you stress. It's going to have you lose sleep, and it could cost you thousands in your commission. So this is a great place to send your clients. So we talked about some of the 3 questions we're getting, right? What are interest rates doing? What are values going to do? Is it still a good time to buy? So let's talk about those home values. This is a great slide. And you'll know this slide comes from the National Association of Realtors. I actually have subscribed to Keeping Current Matters since it started. Yes, I'm that old. But the reason I've done it for this many years, literally like 20 years, is it's great content. They do the hard work that I would never do to complete all of these slides. So if we look at this, if we look at the amount of sales by year, everyone's like, oh my gosh, we're going to have this rash of inventory and we're going to have foreclosures again. No. So let's look at, and then they're saying, oh, by the way, oh my gosh, we're gonna have the worst amount ever. No. Is it down? Of course it's down. There's only one way to go down from one of the best years ever, right? I mean, that's it. You're going to be down. But I love this because if we look at pre-pandemic, we can see that 5.6 projection they have for this year. Listen, it's right in line all the way around, besides the market during the pandemic where people figured out they could work from home. People moved around the country because their companies aren't making them work where they live anymore. And people had more time on their hands to get this done because they were working from home. They weren't going to concerts. They weren't going to football games. They weren't doing anything like that. So of course it's down. So the conversation is, of course it's down. Easy.
Black is way too harsh and cut your feet off. Go for white, nude, or light color.
Of course it's down.
Avoid showing your bra straps when you are wearing.
Hey, Heather, could I ask you to mute?
Strapless bra instead. 3 styling mistakes.
Okay, so of course it's gone down, Susie. From the best years ever, you can't stay at that top forever. That's not sustainable in an economy for the market. So what we are back to, which is awesome, is a pre-pandemic amount of people buying and selling. Now, honestly, if we look at things, let's look at why equity is so important. Because this is one of the things when you hear people going, oh, there's going to be another crash. I'm going to wait to buy because values are going to plummet. Okay, so one of the reasons that is not going to be a crash is the amount of equity that we all have in our homes right now. So take a look at this. So this is somebody that it has a mortgage and has a credit score less than 700, right? Look at how much equity they have compared to the amount of their mortgage. And what does equity do? It gives you options. So there's always going to be something bad that happens. Somebody's going to lose their job and somebody's going to get sick, right? But listen, when that does happen, when you have equity, you can sell. You won't have to short sale. You won't have to do a foreclosure. You're just going to list your house and it's going to sell. It also means that if you're looking to move up or move down, you've got that ability because you have some down payment. And what if you don't want to buy or you don't want to sell? But then you have the ability to improve your home for the future and build additional more equity by improving the interior, exterior of the home. And that's where you guys can step in and give them the best advice ever on what they should be doing that will give them the most bang for the buck. So it was pretty funny. I was talking with somebody and they were like, oh my gosh, the market's crashing. And so I called a local real estate agent here that I work with. And I'm like, what are the current average days on market? And I think they said it was like 15, right? So the problem is we've got sellers right now that think they should have to put their house on the market for one day and get 32 offers. Again, that was the anomaly of 2021 and part of 2020. And right now we're average days on market in the nation at 17. That is still technically a seller's market. Right now, we're not seeing a lot of what we saw before. We had 2 contracts this weekend. Offers got made, they got accepted, one and done. They didn't even have to make an offer on a second house, right? They found the one they loved, they made the offer, got it accepted, which is great for our buyers. And it's still great for our sellers because everybody wins. When it's win-win, everyone's happy. So with 17 days on market, I clearly is not a crash at all, right? And if we look at the total home sales forecasted from Fannie, NAR, MBA, and Freddie Mac, we can see they're still forecasting a ton of sales happening for 2022. So I always believe in having quotes from professionals that this is like all they do. So this is a chief economist at the MBA. You know, yes, rates are likely to plateau near the current levels. They're going to move every day. You know, we got better a quarter in one day. We might lose an eighth in rate the next day. They're really working out what's going on in the economy. And it's a very different economy. And we're so global, right? We're not just worried about what's happening here in the US. We're global economy, and what happens over in other countries can actually affect us. And so the other experts are saying they don't believe the market is in a bubble or a crash is in the cards, like during the Great Recession. We'll talk about that. The nation is still suffering from a housing shortage. And as long as there's a housing shortage, we're not going to go into that recession. So I think that's huge to have. So what is recession? And I think knowing the exact definition of it is absolutely huge. So just picture yourself talking to a buyer and they're saying all the stuff they said on the news, and you're able to give them the charts and the graphs and professional comments on it, how much more comfortable they're going to be. So this is it, a significant decline in the economic activity spread across the economy, lasting more than a few months. So it's when GDP is 2 months that they feel it's a recession. But even if it isn't a recession, there's this to give them so they feel comfortable. I'm sorry, I'm like getting on my toes because I'm so excited because I want people to have facts and not come from fear. Fear is a horrible place to be. In the last 6 recessions, which crazy, I've been in the mortgage business, all of those, we've only had one that home values lost, only one. And that was when the mortgage world was fogging a mirror. You could get a mortgage. We were lending people on investment properties with 0 down, stated income, stated assets. We got so loosey-goosey because the government said we were being too tight on guidelines and not giving home ownership to everybody, right? So that's the only one it ever happened in of the last 6. So this is a great thing to share with folks, to give them facts, not fiction, to help a seller or a buyer get off the fence, right? And then here's a great one. I love this because it's showing what happens to mortgage rates most of the time when there's a recession. So here's my thing. I don't have a crystal ball. And if I did, it probably is going to be a little cloudy, because just because it happened 6 times before doesn't guarantee us it's going to happen in the future, right? Is it telling us signs? Absolutely. You know, I can't remember. I think it was Jeff Foxworthy, here's your sign. So yes, it gives us the signals and the signs of what could happen. So we can't guarantee it, but it looks like if time and history gives us predictions, it looks like even if we did move into that recession, that most likely mortgage rates would go down. That's awesome, right? We hit that lowest point ever. Look at this bad boy. It brings us back to 1972 again. It's showing us that the lowest rates ever since 1972 happened for that brief snapshot. And while it felt good then, the morning after rates went up. It's just how they happen. It changes, they go up, they go down, but you're not married to it. Fall in love with the house, but you're not married to it. The other big thing I hear, which is scary, and I get it, right? Because I lived through the 70s with my parents and through 2007 as a homeowner, as a mortgage person in our industry, is the amount of people that got foreclosures. And they're like, oh my gosh, we're going to see all these foreclosures happen. And the fact is, we already looked at, we've got so much equity. We're not looking at what happened in 2007 because it was scary. So there is 2012 when we hit peak of distress sales. About 35% of the sales had foreclosures or short sales, distress sales. They're foreclosures and short sales. Almost 35% of them were that. Now let's look at today. And we are less than 1% of sales are distress, foreclosure or short sales. Less than 1% compared to almost 35%. So that tells me that looks pretty close to not having to worry about all of those happening. And then here's the other thing. Here's a great slide to use that just proves it even more, where our lending standards are. And that means what kind of mortgage were we making? Were we righty-tighty or were we lefty-loosey? And you'll see we were lefty-loosey. We were up at 868.7. Never seen them higher. We were making loans to people that in hindsight, from past performance, they were never going to perform. They were probably never going to make their mortgage payment on time. That this is what happened though. That happened, and in 2009, we got tight again. We went back to the old days. Oh my gosh, we have to verify income. We have to verify assets. And so you'll see that now we're about where we were when we made that radical shift after the housing crisis. And so we're not making those types of loans anymore. And it's good to know that's a big piece of what happened. We also had a horrible economy at that time, and our amount of jobless citizens were really, really high. We're at a 52-year low of unemployment right now. So there's two reasons why it would appear it's not going to happen. So how do you differentiate your listing and buyer presentation? And I'm not going to ask you guys to raise hands. This is like your own come to Jesus moment. But I want you to ask yourself, do I have a buyer presentation? Do I have a listing presentation? And if the answer is no, then let's sit down and talk about that. If their answer is yes, but I definitely could pimp it out a little bit, make it stronger, so it makes me as a professional come across more professionally, so think about your fact-driven listing presentation about the market. You go into your very beautifully pimped out marketing plan, and then talk about how you have systems to control the transaction, looking out for the seller's best interests, and then how you deliver and what your clients say. That's what should be built in a listing presentation. That's what should be built in a buyer presentation. Just imagine, looking at a buyer presentation that has the facts out here, and then build in the fact, if they're not sure they want to buy yet and they're still renting, bring in the fact of where current rents are for the houses that they're looking at. And then you and I together can build that plan where I show them what they lose over a short amount of time by not buying when it comes to appreciation, equity through payments, and tax deductions. You got it. You are nailed. They are yours to go and find them a home. So I want you to think about that. I want you to think about how a seller presentation, where you bring the facts and we get it priced correctly the first time, with facts, not fiction, how that could help. So we've talked about facts, not fiction. We've talked about how to get all that information out to your community. We've talked about differentiating not only your listing presentation, but a buyer presentation. So it's like, wow, like they're going to walk away going, that Sandy Krestan knows her stuff. Now, of course, that doesn't mean that it's nailed up. You've got to do the follow-up. You've got to say the thank you. You have to do the handwritten cards. You have to thank them for even considering you, but you're like almost there. So then now let's talk about, we've got some buyers that are sitting on the fence, right? They may be pre-approved. We've had a bunch of people pre-approved at lower interest rates. There's some buyers right now at the higher interest rates with the down payment assistance that might not qualify. Now, as of today, Home Plus brought their down payment assistance back Tuesday. So there is some down payment assistance money available. Rates are higher, of course. So we're going through all of our old pre-approvals to see who can still qualify at the current rates to get them back out there and shopping. But one of the things that we can do to help get buyers off the fence is something that I've done in my past. Yes, I'm that old to know about it, is a temporary buy down. So if you've got a buyer and they're like, oh my gosh, rates are so high, I really don't think I can afford that payment right now, we can look at a temporary buy down for them to get them in a lower payment, a way lower payment the first year, and then a little bit higher payment the second year, and then back to what the payment would be in year 3. So we're going to talk about it from the perspective of the buyer, but we're also going to talk about it from the seller perspective. So for this example, we had a buyer for a listing, one of my agents, FHA, the purchase price was $420. The seller was about to lower it to 410, right? 10 grand. And in that price range, a lot of these people would be an FHA buyer. So I took an FHA loan with a minimum of 3.5% down. And I went to look at what would a 2-1, which is 2 years, 1% each time that it changes, what would that payment look like? So I took this specific house and I created this for my agent to be able to have that conversation with the seller and show the numbers. So, and then to have available for a buyer to come in, because there's a really good chance that this buyer and the other agent might not even know about this. And you could use it to market the property. Not every lender is doing buy downs. I've picked up a couple of referrals where their lender worked. So think about this, the first year, instead of having a payment of $23.74 in principal and interest, it would be $18.81. So for 12 months, that buyer would be saving $492 a month. And then the next year, it does go up by 1% in interest rate. So it goes to $21.20, still $253 less than it would have been in year 1. So, and then in year 3, if the market hasn't changed, the payment would go to $23.74. So here's the thing about a buy down. For a seller paid buy down, let's say the seller's going to pay the cost of those 2 years lower interest rates, because we're not a nonprofit. We don't just do it for free. So that would be $8,961. And I left off the cents, just so you know. So if they don't reduce it by that 10,000, they sell it at $420. The net price to them would still be 98% of the original list price. But look at that. It's actually less of a cost than the price reduction they were thinking about doing of $10,000. So the buyer wins, the seller wins, and everyone's happy. And if you've done your comps and you know your listing, if you feel that the market would give a value to the appraisal, for example, of $430 for this one, you could actually increase the price to cover the cost. So the sellers would actually net 100. Kind of sexy, right? Not your normal thing you're looking at. So it's a great thing to talk about. So from the buyer's perspective, if you have a buyer looking at a 2-1 buy down, what happens is all of that $8,961 goes in an escrow account. So every month when the buyer makes their payment of $1881.08, the difference comes out of the escrow account to make that principal and interest whole. So let's say it's 8 months down the road, and you know what I pray for every day is mortgage rates coming down. It happens, and the borrower wants to refinance. They absolutely can, but you want to hear the cool part is when they go to refinance, whatever's sitting left in that escrow account from that buy down gets taken off of their payoff. It gets right off their principal balance. So how super sexy is that? They get the benefit of it still sitting there. Plus, because there's no prepayment penalty, you are able to then get a lower payoff. So they actually win. I think it's amazing. And it's kind of like, it's a way just to engage people in conversations again that were sitting on the fence, that maybe that 2-1 buy down could be your little elbow saying, hey, let's talk. It's time to get off the fence. You know, rates will come down again. You already have that chart I showed you from 1972 that they've been lower than we are right now. So we know it will happen. When? We can't say for sure, but we know it will happen. So this is awesome. So if you have listings, if you send me the listing, we'll do a slide like this for you. Look at the numbers. I would definitely look at this if you have any listings before you ask the seller to lower the price. This might be a super sexy way to get to the buyers. And then think about doing a video. Guys, it's 2022. Videos are here. How cool would it be to put out some marketing to your community, an email, whether it's Facebook, Instagram, YouTube, LinkedIn, talking about these kind of things. Nobody's really talking about it in detail with facts and not fiction. So just know, if you have a listing, we can absolutely do this for you guys. We give a great visual tool. I would highly suggest if you know that appraisal could come in higher, that we talk about that as well. But it's a great visual to show the buyers. It's a great visual to talk to your sellers about, with facts, not fiction. So I'm pretty sure you got the idea. Here, this is great. This is an $800,000 house. We can't do these on jumbo loans yet. So there's investors that are working through it right now, but a conforming loan, an FHA, a VA, we absolutely can do a temporary buy down. So this $800,000 property, and we have a $647,000 loan. Now that 5.99 rate is lower now. This was about a week and a half ago. So let's say it's 599, 499, 399. That's going to have a total cost to the seller of $14,352. But look at that savings. That could get a buyer off the fence with $790 a month saving for 12 months. And it still has our seller not lowering their price at 98.2 of list price. So it's a great option. We do have agents where I'm taking my branding off that I partner with because I trust them. If they get a buyer, they're going to send it to me. That you have the ability to take that off and then put it in the MLS. So, because it doesn't have any branding on it, it won't have your info on it, so they won't call it advertising, but that you could put about it because a lot of agents don't understand it. And I also want you thinking about, if you are the listing agent and you do this and you get somebody who doesn't, I am your partner. Like, I'm in that front seat of that police car with you, no man left behind. I can talk to buyers agents about it. 37 years, get them 100% comfortable. And obviously, wouldn't it be awesome if we got to take care of the buyer so that you knew for sure your listing would close, having taken a loan that hasn't closed. So that is a big thing on your built-in free insurance policy. So we've got a super pretty flyer that we can co-brand with both of our information on it, talking about the 2-1 buy down, what it is, what it looks like, what some sample costs are, so that you can get out to your community to maybe kick some people, elbow them off of the fence. The other thing is there's also, that's temporary. There's also what they call permanent buy downs. And that's where when we have a buyer, I check both out just to see what's going to be better for them. Is it, and for the seller too, right? Because a temporary buy down, the payment changes. The permanent buy down means we're going to look at rates today, and there's always a no point loan. And I'm going to look at what that, for example, $14,000 in points, what rate that would get us at, and which one they would feel more comfortable with. Because just maybe they come in the door because of the 2-1 buy down doesn't mean that's how they have to go. It's about having options. Any questions so far? Sign me up. I definitely want to chat. Awesome. That's fantastic. So let's take a look at this. So do buyers have concerns about values? Of course. Could they be waiting for a crash? I hear people say it all the time. I was working in open house with an agent a couple weekends ago, and I had one of the buyers say that, people walking through going, oh, I'm just going to wait. It's going to go down in value 100,000. I keep these pictures on my phone. And I'm like, well, I might understand that you think that from watching the news or maybe stuff on the internet, but I just want to show you this. And I literally have all of these on my phone and on my, my iPad, and ready to go with me whenever I meet somebody. I don't even care if it's out for dinner, right? If I'm talking mortgages, I'm talking real estate, I want to give them facts, not fiction. How cool would that be to have your iPad there or on the TV in the home that you're listed with this kind of information going through with facts, not fiction. So I'm hearing a lot. Do you think rates will go down in the next 3 months? I'm like, it depends. Yes and no. They're going to come up. They're going to come down. I mean, they could come down tomorrow. It's just a matter of how much they come down. So remember, what we're here to do is we're here to take away their concerns, their fear. And when you take away their concerns with facts, they can make an informed decision. Because I know you, and I know you don't want them making a bad decision, right? You want them to make a good decision for them, because the last thing you want to have is somebody knocking on the window of your office going, what did you get me into, right? And so while it's my job to educate your clients and to inform them of options, the final decision is theirs. And so I wanna just remember, the more we give them facts, the quicker they're gonna move to wanting to buy. So nobody wants to be sold, they wanna buy. I love that quote by Michael Mayer, the author of the 7 Levels of Communication. Nobody wants to be sold. No one wants to have commission breath breathed on them, right? They want to buy. They want to get the facts and they want to feel comfortable. And so I would encourage us, we're this big team, right? We get under contract, it's the borrower, it's the buyer's agent, it's me as your lender, it's the selling agent, it's the seller. That is a huge amount of people and feelings and facts that get rolled up. And we want you to know that we work jointly to make sure that we keep our boat rowing. We're doing a mid-process survey in the middle. We'll make sure everybody's happy. If you hear anything going awry, we're going to let our partner know so that you can do a mid-process correction. So keeping all that together is huge. And that needs to be in your listing presentation because, there's a lot of real estate agents out there. I don't remember how many gazillion real estate agents there are. There's been a lot of them that got their license the last 2 years. That when you shore up your systems and your buyer presentation, your listing presentation, your communication plan, there's a need. NAR is saying about 30% of the agents are going to be getting out, but don't worry, about 30% of the mortgage people will be getting out too. Now you can shore up. There may have been people over the last 2.5 years that cheated on you with another real estate agent. It's okay because they could be orphaned when that person gets out of the business. So now is the time to shore everything up, to get your listing presentation, to get your buyer presentation, to go out there and educate. The slides that Keeping Current Matters sends me every single month, I think there's probably about 90 of them that I sit there and I go through. Some of them I fact check because I'm like, I don't know, is that real? But I take the time to get into what I do. So now is when you need to do that. So I would love to, if no one has any questions, we'll move forward. If you have any questions, feel free to put it in the chat or on mic yourself. We will be done probably even earlier because I feel like I'm talking. I only had 1 cup of coffee this morning, 100 miles an hour, but we'll be done even earlier than the 11 o'clock that I thought. So any questions so far, put them in the chat or open mic. Otherwise, we'll kind of just wrap everything we've talked about in a bow. I am recording this, so I'll make sure to get you the copy of the recording as well as the slide deck. Listen, experience matters. The right relationships are everything. So this is what one of our longtime agents we've been working with for about 12 years, Dave said about us: your name on the pre-qual is worth more than anything I could write in the contract. Who you partner with matters, period. And it takes a team. You cannot have an excellent process without having a team behind you in the mortgage world. So we do, that's Pam and Kayla on the team. Pam does all of our pipeline management, all of our communication, all of making sure we do not close late, we do not close ugly. Kayla helps in coordinating all the paperwork. We learned from 2007 to 2012. We're back to document, document, document. You guys have location, location, location. So there's a lot of paperwork that comes in. She manages a lot of that. Plus, she's amazing at social media and graphics and helping me with my videos. So it takes a team to make all that magic happen, but we're not alone. I don't know if you know this, but besides me being in the business for 37 years, my business is over at Fairway, which is Arizona's #1 lender. And yes, mortgages is what we do. And I'd like to think, I know we're in the top 1% of mortgage professionals in America. I'm in the top 1% of mortgage women in America. That's important, but how we take care of your mortgages first but then how we partner and come along the highway of business with you and help you get to where you want to go. We've got a great credit tool system where if we have people that you know that maybe need to work on their credit, we can help with that. Rates going up, we have been using this a ton for our clients. It's helped us get accepted contracts in the last 5-6 months that weren't happening. It's called our lock and shop, right? So we lock in the interest rate while they shop for up to 120 days. And if when they get under contract, mortgage rates are lower, they get the lower rate. And it's free. My favorite F word, free. The other things we have is we have a great toolkit of being able to put visuals out there for you for specific properties, looking at, hey, this is where they're projecting the market to be in 5 years. So if you have a buyer going, oh, I think the market's going to crash, but I'm just going to rent. We could create this on a property for you and show them what they're going to lose in projected equity, and then show them what they're going to lose in tax deductibility of interest, taxes, all of those fun things. And then if you've got somebody that doesn't want to go over asking, but maybe the listing agent priced it too low, we have a report that will give you what the real cost is of bidding over asking. You know, how long it gets to a point where you're at that break-in for where they're projecting appreciation to be. So not a surprise, right? It never takes very long in our market. We've been amazing. It pulls it not only by, you can put in the exact address, I can pull a market report card on the county. So we can do this for you to do your social media posts. So it's super sexy. You don't see, go to Facebook, go to Instagram, nobody's using this, but we have it as a free tool for our partners. The other thing we have is our cash guarantee, and I just realized I see a typo. We'll get that fixed. We created this because we knew that we were competing. So if we have a buyer that wants to do the cash guarantee, what we do, even with the lock and shop, is we take the pre-approval that I do, and it's strong because I did it. We don't issue a pre-qual unless we've seen the documents and run the automated underwriting and I've reviewed it. But this takes it to the next level. We take it as a TBD and we actually submit it to our loan processor. We get it into underwriting so that when that offer is made, we have a pre-approved loan through underwriting. And once we clear the conditions, we can then give them the cash guarantee from us that goes to the seller. And so honestly, I have about 5 or 6 with the cash guarantee, haven't even needed to use it because with the pre-approved through underwriting, you know, we win. The combination of every single offer that you make, as long as you let me know, I'm going to be calling that listing agent. If they don't pick up and I call them again, I'll shoot a video and text it to them. I will text. It makes a difference because you all know if you're going into a call center, that loan officer isn't going to be calling the listing agent. They're not going to answer on a Saturday morning while they're on their horse, right? They're not going to do that. That's what we do. So we always make sure to share to the listing agent the strength of the borrower. I ask every borrower when they have great credit, is it okay if I am able to give the seller your credit score? And everyone says yes, because for me to say, hey, listen, the buyer gave me the okay to share with you that their credit score is over 780. Okay, whew, we'll be falling apart because of the credit score, right? We also cross-sell you to that listing agent. Hey, I've worked with her. She holds a tight ship, right? She brings us to closing. She's on it. She's on her borrowers to make sure everything happens. And then we review the timelines with the listing agent. I'll go over if they've been into TBD underwriting or I have every document. I go through all of that in the confidence that I have with my 37 years. And then if we have an appraisal waiver, which with anybody with 10% down or more on a conventional, we run it through and trigger it and figure out if we're going to get that appraisal waiver. That makes a difference. If not, and we talk about what if the appraisal comes in low, we of course have an appeal process, which you can imagine I know how to do with the amount of years of experience I have. We also then are able to talk to the borrower and say, is it okay if you do an appraisal gap, we're able to say, we've confirmed they have assets for that appraisal gap. So we deliver the loan status update every single Tuesday, like clockwork, because I don't do it. The team does it. And then in between LSUs, because you still want to know what's going on, silence is where fear and doubt happens. We do email status updates of everything that happens during the process. It's just a quick email. Hey, it's been submitted. Here's our current turn times. We also leverage a hotline Google Voice number. So during the week, Monday through Friday, our team is available on that. So the chance of all three of us being on the phone, pretty slim, but it happens sometimes. And there's my cell. I do believe we are the dream team. Want to open it up for any other questions that you have about getting your listing presentation, getting your buyer presentation, facts, not fiction on the market. Oh, thanks, Allie. We appreciate you and appreciate your kind words. Upcoming event, if you see my emails and you'll see it come up about our Fairway coaching opportunities, Chelsea Pipes, and she usually brings somebody in once a month. She's doing it just for Fairway. It is on Zoom once a month. Every single month I sit on these, I get takeaways for my business. So make sure to watch your email. I'll send the link to register just in case you can make this one on the 13th. Any questions for me at this time? If you want to connect, you want to talk about getting these slides, or you need help putting a buyer presentation together or a listing presentation together, that's one of the things we could do coming alongside the highway and helping you get that done. So we're just super grateful for you. I do believe, and through facts, not fiction, that 2020 is going to finish strong. We are on pace with where we were last year. So there's people buying in your community, your friends, your family, your past coworkers. We want them to be buying and selling with you, not without you. Just remember, if you need anything, check us out. You can always see what we're doing on our website at thekrestanteam.com, and watch your email in a couple hours and I will get all this information out to you guys. Super grateful for your time and I hope you have a great day.